TGIF Warriors. Hope everyone had a decent week. Had this big dollar break. I'm not sure it's a reversal week, but just almost. So my bias would be, looks like the dollar is smelling potentially a good number. I would be looking for a failing rally to sell into to react to the reaction here. Similar scenario in Euro. Maybe 16. Think do your fibs from here to here. I'm figuring 1620, 1580 zone. I know it's not specific, but that's what I have. Okay, and one other trade that worked out. I don't know where I talked about it. It was here or somewhere else. Anyway, it was the Euro Aussie. And it did have a reversal week unless it gets creamed. And look how it held the weekly 50. So, you know, one thing for sure, under this low, there's big acceleration. And maybe we're going to have some type of recovery here first. Maybe get some type of right shoulder up here. And then I don't talk about cryptos a lot, guys, but just want to show you something here. You know, a lot of people are thinking the lows are in Bitcoin, and I tweeted one more washout imminent, so we'll see. The case being 1, 2, and a third coming. Similar setups in Ethereum, right? 1, 2. Actually, Ethereum and Litecoin have better patterns than Bitcoin, so Bitcoin will lead it. And here's Litecoin. So I'm starting to pay attention to this. Litecoin, pretty classic too, unless we're getting a right shoulder. So the scenarios are either right shoulders in Litecoin, Ethereum, or one more washout under 107. So if that happens, there could be some opportunities on the long side. Okay. Oh, Dan, you took profits up there? Or you got short? Okay. Short? Okay, well then I'm not buying the dip here. I'm not going to fade you. All right, so that's a wrap I have for me. We have NFP. I'm sure Stella will be back, and wondering what Steve is thinking here today. You know, Steve, I don't do much on Fridays, especially on an NFP. And if I do something, I prefer to wait for the NFP instead of playing roulette, black or red. I'd rather react to the reaction. What's your philosophy on red events like this?
Good morning, Dale.
Good morning.
That was it? A 4-minute introduction? I have to take the rest of the show.
Yeah,
I know you're doing it on purpose.
Huh?
You just want to get me warm.
Yeah, I want to. Yeah, that's it.
What's my take?
You know, I mean, you do. I think you do carry positions into red events. Do you pare them down?
Not only I carry positions, but for example, you know, within the last 48 hours, I've closed my short Euro Yen. Yesterday night I closed my short Euro Aussie, as you very well said.
Okay.
As you very well said, there are quite decent indications that, you know, they're bouncing from here. And anyhow, you know, they were in a very, very healthy profit. I didn't want to risk it. I mean, that they were both good trades. I'm out of my USD ruble as well, the last part of it, for a small profit. And you know, I'm almost at market with my USD NOK, and I'm looking to close that down. And I actually bought Euro USD today. Those that are in the chat room, they already know it since a couple of hours ago. So I bought half a position in the Euro USD.
Okay. Where would you look for the other half? Around 116?
If we move lower,
Right.
lower, right, like at high 115s.
Okay.
Anywhere between 115.50 and 115.80, 90, somewhere there. I would establish
Okay.
another half a position if we do see a dip.
Right.
And then I would be looking for 118.50, and I would be risking 114.50. So roughly a 1-to-1 trade after I establish another half of a position. Of course, there is always the chance that we will see a weak dollar reaction,
Yeah.
in which case,
Yes. Your
I'm
toe
gonna
is in the water. At least your toes.
I'm gonna be left with half a position running in profit, which is also okay. I'm okay with that. But you know, I made some very good profits being short. I mean, I made almost.
Yeah, you rode that
3.5%.
Euro yen and Euro Aussie quite a way.
Yeah, so you know something. If I have to give back something to the market, and this doesn't end up working, I'm fine with it. But I do like this trade. I do believe that as long as we are above 114.50, there is a quite healthy chance for a rebound higher in the euro. Same applies to the cable, by the way. But between the two of them, I chose the euro. And you know, I would be looking for some kind of a healthy correction before we can see more downside. So in essence, before we can see more dollar strength, I would expect that the dip in the dollar is not going to be as shallow as the one we've seen so far. Right. So this is at least my thesis. And as I said, the market has been kind with me with the euro crosses. Now, if it wants me to give some back with the euro USD, so be it. You know, just being afraid, you know, you would never get positions in the market. So this is my plan, and this is how I intend to trade it. Now, nobody can guess what's going to happen with the NFPs. There's no question about it. Should I take the screen, by the way, Dale?
Yeah, go ahead, buddy. Yeah, I was
Okay.
thinking about 93 to 92.5 in the Dixie.
Let's go to the Dixie. Since you began by mentioning the Dixie, let's go to the Dixie. So here's the Dixie. What I'm saying here in the Dixie is that we actually, first of all, I'm paying very close attention to candlesticks as well, as you know, and this candlestick that we had 2 days ago is a very, very strong reversal candle. So wouldn't really surprise me if we got an initial reaction higher, as you said, right?
Yeah.
We've also now, as you see, broken below this ascending channel. So it wouldn't really surprise me if we got a bounce from here, you know, and have it fail right at, I don't know, 94.50 or somewhere there, and then see one more leg to the downside. So this is what I would be expecting. This is what I'm basing my trading plan on.
I like it.
Yeah, I like it as well. You know something, I like it as well. That's why I took the trade. But as I told you, because
arithmetically, I know a lot of people are talking about 97-ish. You have a 96.04, 97.87, but
I like this zone here.
Yeah, 96. Okay.
Yeah, it's 96 and 96.40 roughly.
Yeah. Okay. So, you know, arithmetically 95 to 93, and then above 95 gives you 97. So, you know, that could be the setting.
I think this is the zone here. This is the zone.
Okay.
Anywhere between the 61.8, which is almost at 98, and 96.40. So, in my opinion, very high probability that, you know, the next leg higher for the dollar is going to bring us within that zone, in which case I will be definitely establishing short dollar positions more or less in all over the board. I mean, in which case, I mean, when I like, let's say, one of the big currencies like the dollar or the euro, I like it very much in one direction or the other. Usually what I do is that I establish multiple positions, smaller each one of them. So in essence, I in that case, I would be establishing more or less a basket of currencies long against the dollar. Okay.
Right.
Because I will be looking for a general failure of the dollar, and I wouldn't want in this case to be basing my luck on perhaps choosing the wrong currency, because you never know. I mean, some kind of an event might affect a specific currency one way or another. While if you have a basket of currencies, then you know you will be on the right side of the market if, in general, you know the currency you're trading against is going to be doing what you're considering it's going to be doing. And as I was saying the other day as well, I consider this rally to be part of bear market rally. So if we go, the closer we get to 98, the more aggressive I will be getting with shorting the dollar.
You know, I didn't notice this till I was looking at your dollar chart, but be interested in your viewpoint here. So if you look back to last fall, you had that low around 91 before we rallied to 95. And then we had the washout to 88.5. And now we rallied right back to 95 again. What if we
Yes,
get a
exactly.
pullback and it's kind of like a right shoulder or a cup, and it looks like getting back above 95? Some people would be able to rationalize even higher levels if they call that some type of formation with a 95 breakout.
I completely understand what you mean, but many friends here might not have followed your thought process, so let me show it. What you're saying is that this could prove to be a cup and handle formation, in which case theory tells us that the target would then end up being a lot higher, right?
Yeah,
that's the point here. Okay.
Or it's a pregnant woman lying upside down. The pregnant woman formation. Anyone ever? I bet no one ever learned that anywhere on the net.
I'm guessing you're right.
Give me a why.
Steve.
Yes, Dale.
Hello, everybody. If I may add, this is a scenario that could well happen, and it's always important to note. We've said this many times that 50% of the DXY is euro-dollar. So this could happen not only because of dollar strength, but it could happen simply because the euro just gets slaughtered. So it doesn't necessarily mean that we're going to see huge dollar strength. We could do, but even if the euro gets really sold, then that could go to 98, 100, whatever.
Speaking of the euro, Stelio, I didn't want to mention it before you came here. What we talked about Spain and the vote of no confidence. Actually, we've already had a change in Spanish Parliament. I mean, Rajoy is not anymore the Prime Minister, right?
Oh my God! That happens more than getting pizza delivered.
So yeah, he lost the no confidence votes, and Pedro Sanchez, who's the socialist leader, is now going to be the prime minister.
One thing is for sure, the IBEX so far does not seem to worry about it at all.
Looks like Rajoy being out of the picture is not such bad news after all. That's what the market.
Yeah, because look at the IBEX. Where is it?
Or also, it's been broadly anticipated for the past few days.
Yeah, 1.9% higher the IBEX. I'm still tracking this as a very broad corrective formation. First of all, we have to say that the Spanish stock market remains within a long-term triangle. So long-term direction, it doesn't have any. Actually, somebody could easily interpret this, since we came on the way down, that eventually this triangle is going to break to the downside, eventually. But within the confines of this triangle and looking more to the medium term, it wouldn't surprise me. We had an aggressive move higher. We have a slow move lower, quite overlapping, etc. So my technical point of view tells me that I wouldn't be surprised if eventually this formation broke to the upside, came closer to the triangle's resistance once again, before eventually failing and eventually also breaking below the triangle. So especially if we're talking about longer term, my theory, I've said it many times, this expansionary phase of this business cycle has already been extremely prolonged. The fact that the Spanish stock market has gone through the best years of expansion and hasn't managed to break to the upside is definitely on the long term worrying, because what happens when we go into a recession, or when and if the Eurozone crisis deepens after we go in a recession? So in that case, I would expect what has been a triangle to fail to the downside. But until that happens, I do see the potential of another move higher. So this is my longer term view having to do with the IBEX. So Stelio, the new guy is a socialist, right? I mean, from the Socialist Party, correct? But from what I remember, they have not been acting weirdly or saying that they want to leave the Eurozone or European Union or whatever. In any case, they are pro-European, so that's considered positive.
Yes, and if you look at the polls within Spain, there a vast majority are pro-Euro and pro-Europe. And just to note that Pedro Sanchez, he became the leader of the Socialist Party, I think in 2014. Before that, he was relatively unknown, and also, Rajoy was in charge since what, 2011.
6 years.
So
yeah, 6 years,
6 or 7 years, yeah. So it's uncharted territory for this guy, and we'll see what it does. But I haven't seen any, I haven't seen any big headlines or any statements which could cause worry.
Agreed. Yeah, it doesn't seem that it should be worrying, at least for or put in jeopardy Spain's position in the Eurozone. And I think the market is considering that as a positive, especially given the uncertainty that we've seen in Italy. The Spanish issue seems like a little blip, right?
Yes, and the main thing to remember, in my opinion, is that this change in Spain now is a change, but with no big uncertainties, no big risks. So it kind of makes sense that the market treats it as kind of positive. So so I'm not worried about anything right now. Obviously, you never know what happens, but it doesn't seem like this government is going to cause any huge trouble in Europe, at least.
By the way, Dina is asking for the 10-year notes, and that is a very, very good question, because my thesis here as well is that we have a very clear picture for the 10-year notes. This is a descending wedge. We had an impulsive, a very strong short-term move to the upside. We broke the descending wedge, and now we've come back to retest the horizontal area of support resistance. So in my opinion, from a technical perspective, the risk reward is excellent for somebody to be looking for at least one more leg to the upside, targeting this area, which is roughly the 122.5 area, because I do think that even if this is a bear market rally, which is very likely, it should have at least one more leg to the upside, right? So nice area of support here. Perhaps the NFPs are going to be the catalyst, or perhaps the NFPs are going to be the catalyst to see a short-term break lower to retest perhaps this broken wedges resistance trend line, and then move higher. So I do like the 10-year notes higher from here. In essence, I would like to see yields pushing lower at least once again. Okay. I'm sure actually that Grega is of the same opinion. We discussed that yesterday together. So this is what I think about the 10-year notes. Regardless, I think this is a good trading plan because the reward to risk ratio is excellent. Now, you can never be 100% sure about what the market does. You can always, though, be sure that you have the proper risk parameters, and that what you have in mind has a decent chance of happening. So that was a good question. We addressed this more or less related to it. Let's have a look at the USD yen. USD yen is rebounding from here, 110, quite an important area of resistance. So wouldn't surprise me if I saw this move fail and perhaps move lower from there. We also talked yesterday with Grega for the possibility, let me mark it here. This is just a possibility, right? It's a scenario, but we're just having a look at it, of having the market form, here it is, a head and shoulders formation here and break lower, right? So this is also a probability. So in which case, I would expect this to fail below 110. I think as long as it does, it's fine to be looking for one more push to the downside, perhaps at least one retest of the 105, 105.50 area. Okay, cable more or less it's trying to rebound, but so far it's unimpressive. There is no question about it. The euro looks a little bit better. That's why I chose it. It has already broken above this descending trend line. Now, ideally speaking, I would want to see a dip towards the high 115 areas, so I can add some, and then a move towards the 11850, 119, 11920 area, even 120. At 120 we have the 200 DMA, but in any case I wouldn't want to see it higher than that, simply because I would be looking for more dollar strength after a healthy rebound. Same here with the cable. I would be really wanting to see a move towards the 136 area, in which case I would be selling pounds, because I do think there is more downside. Now, having to do with Aussie and Kiwi, I have to say, I said it yesterday, Aussie looks rather weak to me. This looks more or less like a textbook bear flag formation. So a break below the 75 cents area, I think, should extend towards the 73 cents area. And having to do with Kiwi, Kiwi had a stronger rebound, but regardless, it held this, which is a potential bear flag as well. Definitely between the two of them, if you want to be short one, there's no question that the Aussie should be the preferred short. You can also see why by examining the Aussie Kiwi. We had pointed out to the Aussie Kiwi being in an ascending wedge. The ascending wedge failed. We're pushing lower. The next area of support is at 1075. So as long as we're trading below this ascending wedge, I do think that we should favor Aussie weakness over Kiwi. Now, having to do with risk, nothing really has changed in my outlook. I still see a consolidation here. The more we are consolidating without breaking down, and we remain above this broken triangles resistance, the higher the chance for at least a push towards the 2,800 area, if not to new all-time highs. So I remain very cautiously constructive. I'm actually also looking to buy the SPX. In retrospect, I should have done yesterday when we had that dip. I didn't, but I'm still looking for an opportunity to do so and to feel confident enough to do so. It might even happen today. Okay. Let's see. I just covered the pound, mate. I do think that there is still a chance of a rebound high in the pound. If this consolidation fails, I would be looking for the 50% fib of the post-Brexit low at 131.40 to provide support. In any case, I'm more than confident that the reward to risk ratio does not favor being short anymore. I think it's a bad trade trying to be short, because where would you place your stop loss? I think that the next move is more likely to the upside for a healthy correction than to the downside, without that meaning that there isn't the potential of pushing lower once again, but I wouldn't be expecting much more weakness before a stronger rebound, right? Ideally, I would want to see a rebound from here without violating the 132 low that we registered a couple of days ago. Okay.
Great
and
rundown,
as I said,
man.
Thank you, Dale.
You covered the whole board.
Almost.
Yeah.
Almost. Now, having to do with metals, I want to show gold. Gold is a good indicator, in my opinion. Here, it's holding within a descending channel. Unless I see gold break above this channel, I would remain very cautious, right? I'm not really worried that metals are going to break down and collapse. I wouldn't be really much worried about the downside. But for me to be more constructive, I would at least want to see gold break above 1,300 once again. I've also shown that, in my opinion, a metal that is at the moment well positioned for a break higher is platinum. As you see, platinum has a very nice descending wedge formation. If we do see this break to the upside, I think that it should at least produce some healthy follow through towards the 960 area, perhaps, which is, a very nice move in any case. That's going to be like what is it going to be, like 7% move or something like that, which isn't bad at all, right? So if I were to take any position on metals, probably it would be buying platinum on a break higher at the moment.
Steve, maybe metals bottom next week after the yen completes its move to 110 or better.
Don't forget that today we have big event risk with NFPs, which means that there is a very good chance it's also the end of the week, and it's also the end of a month. You'll tell me it's 1st of June, the month has already ended, but you know what I mean. It's very, I mean, from a seasonality perspective, it's more likely, statistically speaking, to see a high or a low at the end or at the very beginning of a week, at the end of or at the very beginning of a month, at the end of or at the very beginning of a semester, quarter, year, etc. So now we have the coincidence that it's the 1st of the month. We have strong event risk, which is NFP, which is an event risk that can affect both risk assets and dollar pairs. So why not? It's an ideal day to set in some highs or lows. So I would be extra careful, and I think there is a good possibility that within the next 24 trading hours, as you said, we're going to be seeing some highs or lows. So I'm going to be paying very close attention to it.
Good boy.
Now, are you going to throw me a bone?
Yeah. All right. So NFP, what are you looking for? Are they street stocking 180?
Street stocking, I think 180, 183. Stelio, is it?
More like 189, whatever. It's that the ballpark.
Okay, but in general, they're looking for a good number.
Yeah, remember last number was disappointing. So they're looking for a slightly better. 180 something is actually the long-term average, I think, of the past.
Yes, exactly, exactly. So in essence, they're looking for the trend to resume as is. Yes. So personally speaking, Dale, if we have a decent number or even, you know, a slightly better number, I don't think that the market is going to pay so much attention. They're going to be like, okay, you know, it is what it is. It's the status quo. I mean, we already know that employment has been strong for years in the US, so the market will tend to focus more on other things. Now, on the other hand, if we have a surprise, yes, Telio?
Sorry, I was just about to say, I think my commentary would be exactly the same as last time we had the non-farm payrolls, which is concentrate on the average hourly earnings more than the NFP.
Exactly.
Obviously, if the NFP number is huge or it's really bad, it will make a difference. But if it's more or less, you know, plus or minus 20 or 30K, I think the average hourly earnings
will only have, in my opinion as well, if it's not something, a great miss or a great bit, yes. I think that the market, after an initial reaction, whatever that reaction is going to focus on other factors and not pay so much attention to that. And the nominal unemployment number is already extremely low. It's 3.9%. Now, yes. Even if that goes up to 4%, because let's say participation rate increases, or even if we surprisingly, let's say it goes even a little bit lower because let's say participation rate keeps on the declining trend or whatever, you know, at the end of the day, it's not going to make much of a difference, right? By the way, let me reiterate here that Blake was away this week, but he's going to be back during the weekend. So starting on Monday, Blake is going to be as usually with us, and he's going to be covering the first half an hour as usually. And also, let's remind people here that Dale. Do you want to actually? No, we'll do it afterwards. We'll talk afterwards about Forest Park effects because we have data coming in less than a minute. So I'm going to leave the USD yen here. Actually, let's go down to the 4-hour charts and build ourselves some nice charts. Okay, here's the USD yen. Here is the Euro USD. We have the S&P on the top left. On the middle, on the top middle, we have Euro USD. Bottom right, we have USD yen. Let's switch to the cable, top right.
Let's also not forget that we have a little bit later today ISM manufacturing, and the sub categories like new orders and prices paid are quite important. So
yes, Stelio, that's 5 o'clock our time in 1.5 hours, yes. Correct?
Yes. Okay, so numbers are coming now. Let's look at revisions as well.
Yeah.
Oh, that's strong.
Ooh, 223.
2-3K. Unemployment goes down, but also participation rate goes down as well. So that's kind of expected.
Yes. So we're seeing a strong dollar reaction.
Also, average hourly earnings 0.3% month on month versus 0.2. So a beat all round.
All data are positive. We can see it here. USD CAD here in the middle on the bottom is appreciating, hitting the 130 level once again. USD yen at 109.70 almost. Euro USD dropping to 116.50. Cable also moving a little bit lower. S&P more or less unchanged, catching a little bit of a beat, but nothing to write home about. So let's see what happens after the initial reaction. So far, obviously, there is absolutely no question. Dollar positive. We have dollar positive data on all fronts, as you said, Stelio. Every single one of the expected data beat expectations. Correct, mate?
Yes. Also, it's actually funny. I don't know if people caught that. A couple of hours ago, Donald Trump tweeted and he said, "Oh, I can't wait
I saw that.
employment numbers." You know, and actually, some people are commentating that the White House or whoever it is there in government, they can actually get the numbers a little bit before, which is
I think it's more than I think it's more than obvious, right?
Yeah. But that was an interesting tweet. Let's put it that way.
Okay, I have to say that
he's pretty good at keeping secrets, huh?
I honestly, I have to say one thing here. I honestly hope he doesn't play poker the same way he tweets.
Yeah. Can you imagine him like during World War II and what Churchill would have had a stroke?
Oh yeah.
Anyway.
Anyway. No, please don't mention politicians.
I think he even told Kim Kardashian what the numbers were going to be, so she could.
Most likely, yes.
Okay. Anyway, that's my political rant today.
Don't mention Churchill and politicians like him, because it makes me sad comparing what kind of politicians we had in the past and what kind of politicians we have nowadays. And this is not, this is not a comment that targets Trump. It's a comment that targets in general the politicians. Yeah. So far we're not seeing any real follow through. I mean, the market obviously needs to digest the data. Yeah, obviously USD yen remains on the highs. Let's have a look at ZN on the 4-hour chart. So let's go down to, here it is. It's dipped a little bit lower, but still, let me mark on the 4-hour chart as well the horizontal zone I was talking about, because I don't have any analysis here.
Yeah,
this is the zone I was talking about. Yeah, it's exactly right here. There it is.
Maybe that blue line.
Yeah. So far, and that was more or less. That's more or less how the descending trend line was coming.
Yeah.
If you did it like this. So this is on the short term, ZN. So we're not seeing a follow through to the downside as well. It's still holding support. Let me switch back to the USD yen.
There's still probably a lot of bears still caught, hoping they get a reaction. Yeah,
there is the likelihood. In any case, one thing is for sure, we got really good data. I mean, the nominal unemployment rate has now fallen to 3.8%. Just think about it. I mean, it's an extremely low number. Yeah, we've said multiple times with Thelio that the quality of the average job is much lower than it used to be. But to be honest, that's a worldwide phenomenon. It's not only a US phenomenon. Still, 3.8% remains impressive, and the market doesn't seem to be willing to beat the dollar further. In fact, let's have a look at the USD yen. The 130 area rejected price action once again. So this is something to consider. USD yen does not seem, for the time being, willing to push towards the 110 area. The Euro USD has almost completely retraced its initial dip lower. So obviously we need to let more time for the market to settle down. But I'm liking this reaction, having to do with expecting perhaps some more dollar weakness before we see dollar strengthening again, because we definitely don't see people rushing into beating the dollar, and that's something to notice.
Also, Steve, when
yes,
sorry to interrupt, when somebody wants to take a view on the dollar, you also have to think about what the market's pricing in terms of rate moves. And if you look at Fed Fund futures after these numbers, their pricing June is pretty much done. Then one more for the rest of this year, so 3 in total this year, which is kind of the base case scenario for the Fed anyway. And then it's pricing.
It was also the base case scenario that we had since the end of last year, right?
I agree. Yes. And then for 2019, we're pricing about 1.5 more hikes. So if you think about it, it's not that much yet. You could easily go to price 2 or 2, or even 3 if things start looking good for the US. So if you're taking a view on the dollar, you have to realize that the market is not pricing an awful lot more hikes on this cycle. So just keep that in the back of your mind. 2 more.
That's one thing. That's one thing to take in mind. There is another thing we know very, very well, and you know it more than anybody else. Stelios, for those that don't know, Stelios used to trade for years rates in a big bank in London. He had been moving billions on the markets. You know very well that rates traders, bond traders as well, and then Forex traders are always ahead of stock market traders, and I do believe that they're extremely skeptical that a hiking cycle, taking into account other data that we know about the market, for example, deficits, trade deficits, debt, etc. I think that the market is extremely skeptical that we can keep on pursuing a hiking cycle without eventually the economy stumbling and having to reverse the whole construct, right?
Yes, and you have to see the effects of all these hikes. And now the Fed has hiked, so many times from 0, we've gone to 175 and more, and going to go to 2% plus. And the thing you said before about bond traders is absolutely right. I saw this for years and years, and it seems that the bond markets are always kind of a one step ahead. I agree with you 100%, and that's there's good reason why the market is not pricing more right now, because we're slowly going to start seeing the effects of the rate hikes. And if you notice, the last 3-4 months, numbers have been missing quite often. Okay, today we had a good number.
And not only that, for those that know, events like changes in monetary policy, they need some time to actually start affecting the market. So these are not events. I mean, they need some time to settle in and start showing their effect. So it's not that if we start hiking today, something is actually going to happen tomorrow. The only thing that might change instantly is expectations, but the true market data, the true economic data, need time to show the effect of events like rate hikes. So
absolutely, many months actually. So it's not.
Many months. I think the pass-through effect is something like 6 to 9 months, still, or something like that, if I remember right.
I would say 6 months plus. Yes, for sure.
Yeah. So that's something that we should take into account here. Okay. I have to say that the market is showing extreme calm after some very strong numbers. As you can see from my screen, more or less the Euro USD remains unchanged on the day. More or less the same applies to cable. USD yen is on the highs, but it was already quite high prior to the NFP numbers. Let's have a look at silver and gold. Silver more or less doing nothing for one more day. Gold initially showed some weakness, now trying to pare back most of it, so it's more or less unchanged to what it was prior to that. Let's have a look at a few yen pairs. Euro yen. Here it is, it's rebounding. If you remember, I also said yesterday, I closed my position 1.5 days ago because I didn't like that candle. I said that a rebound towards the 129 area looks likely, and we are indeed on our way. We're now hitting 128. Let me also show Euro Aussie and why I closed my position. You see the rebound here. I think that a push towards the 156 area is likely. Let's have a look at the gappy. And then I'm going to go through questions. So if you have any specific pairs you want us to look at, please, this is the time to write it down. Okay, the gappy held the 38.2, ended up holding the 38.2. So I think a rebound towards the 147.50 area is also a likelihood here. I would be very, very willing to establish a short position in the gappy somewhere there. I will consider it a very good trading opportunity. I'm saying that in advance. Let's have a look at Aussie yen and Kiwi yen. Aussie yen ended up holding this channel. I will become quite bearish if we break below the 81.30 area. Until then, I see this as a consolidation. Kiwi yen. Was that a false break below 76? It looks likely. Let's see how the day closes. I would still wouldn't, choose to trade it. It's been quite choppy. I don't like though the fact if I was bearish, if I had shorted it, I would be very worried seeing it break below the 70, decisively break actually below the 76 area, and now coming back above it. I would become quite bearish because we've seen often that false breaks can act as very good indicators that a strong counter trend move is coming, right? Let's have a look at the Euro USD, because something tells me that, contrary to what many believe, you see that cable is now pushing towards the highs. Euro USD is more or less unchanged. So the market seems to completely ignore the good data we had, which more or less testifies to what we were saying with Stelios, that we don't think that the market is going to focus so much on what happens with the NFPs unless we see some extreme numbers. And the numbers were not extreme. They were better across the board, but nothing extreme. I mean, one more good number. So I think that's a good indicator that we might see some further dollar weakness in the days to follow. Okay, let me see. We've started having questions. Let's see. CAD Swiss. Yep, let's have a look at it. CAD Swiss, as you see, last time we checked it, it was here. I said that it might push towards the triangle's resistance and then fail. It did exactly that. It didn't go all the way to the resistance, but it moved higher from there, failed, came, and now it has come down, as you see, to a horizontal support resistance area. So I would say more or less nothing to do here. But if we do break below this area, the next area of support is once again this triangle support. We are in the middle of the zone. Bottom line, I really can't figure out why you would want to be trading this. I think there are better opportunities out there. But, this is my outlook. Euro INR. Okay, hello, this is my first time in a webinar of yours. I also took a quick peek at your website. And when I see the pricing, I just wonder if a charting software is included in the price. No, we don't provide charting software. We provide market analysis, patterns in play. Let me show you. This is what we do here. We cover 30 different tickers from 5 different perspectives, 5 different types of analysis: macro, candlestick, basic technical analysis, harmonics, Elliott waves. And, we also have patterns in play. And, we also have some extra tools like a live stream of events of what's happening, calendar, Twitter feed, useful links, and things like that. So you can be seeing charts with our analysis and our predictions about what we think is happening with the markets. That's what we do in ForexAnalytix. This is a new platform, by the way, which is going to be released by the end of next week. We're very, very close. I mean, only little details to iron out before we can launch it. The previous platform is still up for just a few more days, okay? Just to make this clear. Okay, so this is about CAD Swiss, Euro INR, and Pound INR. Okay, I probably haven't done any analysis on those. I can tell you in advance.
Shame on you, Steve. Shame on you.
Yeah, I know. Yeah, this nice head and shoulders formation, though. Now, let's start from the short term. Okay, so let's do this. You can see this as a little head and shoulders formation here. We broke lower. There was a very clear indication of momentum loss up here. I would be paying attention very closely to this area as an area of support. We're getting close to that. For the time being, 200 DMA has provided some support, but in all honesty, even looking at it in the short term, I think there is at least one more leg to the downside. This looks to me like a short-term consolidation. We should also draw some fibs, perhaps a channel.
If you go to a shorter time frame, that probably will look like a bear flag or something like that. Probably.
Yeah. Yes. It will a little overthrow from this channel. Let's also draw a fib here.
Let me answer William's question. Second question, he's asking if we're working with TradingView. Yes, we do use TradingView to create our charts, and that's the tool that we use. But we do not provide any charting software ourselves.
Yes, but I strongly recommend TradingView, by the way. Okay, we almost reached the 61.8. Strong move to the downside. I think that this might actually fail big time at some point, like this. But for the time being, in the short term, I would be looking for more weakness. Okay, and what's 77.50 as support? I think we're at least going there. Now let's have a look at the pound INR as well. And I promise I'm going to do some more technical analysis on the pound INR and on the, oh, that's a nice head and shoulders formation, even cleaner actually. Here you can see it. Right? There it is.
Yes, and then the neckline on this is slanted to, well, you could say it's
it depends on how you draw it, Stelio, but listen, I think pound INR is much, it's much cleaner. Look at this.
Yeah, it's textbook.
Actually, let's start by this side. Okay, perfect. So I think we should start with resistances. So here, I think this is a very, very nice. This is obviously a corrective move. There's no question about it. There you go. And we seem to be breaking down at the moment. I think pound INR looks very nice to the downside. Very nice to the downside. Can produce some very decent follow through. I think this is a better trading opportunity if you want to be long the Indian rupee. Okay.
Great luck.
I'll do some more technical. Okay, let's see what else we have. What about the Nasdaq? Yeah, let's have a look at the Nasdaq. This is a good idea, actually, reminding me. I was showing to the chat room yesterday. First of all, you remember, Dale, that we had talked about the Nasdaq and the potential of this ending up being some type of an ascending wedge. Now, let's go and have a look at some specific strong stocks. Microsoft.
Just there, right there. Yeah. I've been watching that. You know what? On this third drive here, Steve, if you go shorter term, the chart you had up before, it looks like you have a 3 on the 3. So if you just, the third drive looks like it consists of 3 drives. So you get fractals on these 3 drives sometimes. Yeah.
Yeah. So look at Microsoft.
Yeah.
Look at Netflix. Look at Facebook. Let me zoom out. Also potential.
And even Amazon is,
Look at Amazon.
Yeah.
Look at Apple.
Close. Yeah.
Look at
That
Apple.
looks a little more constructive, but I don't know.
In the short term, it looks constructive because this is a triangle.
Right.
But it might also end up being something like this. You see it. So.
Oh yeah, terminal thrust out of it.
Exactly. So as you see, I see several stocks that have acted as the steam engine, each one of them, of the move higher, and the vast majority of them does show that we might have a period of more strength, but on the other hand, there is a clear longer-term momentum loss, and it doesn't look to me it doesn't look good to me if I had to make a 1-year prediction. You know what I mean? So I would be extremely cautious if I wanted to take like longer-term positions here, right? Mm-hmm. That's why I was showing those stocks actually on the chat room I think it was yesterday or the day before yesterday. We might not be covering stocks, but we're trying to have a look at everything because the markets are very interrelated and many correlations, and it's always extremely good to have a very broad idea of what's happening.
Yeah, I'm just waiting for that final drive, which I have been for a while, and you have it peaking the NASDAQ 100 up there, and then making another run. I don't know. If you show the NASDAQ 100, that'll be pretty classic. I've been saying the pattern's incomplete, but that'll complete it up there.
Here it is.
Yeah. Yeah, I don't know if it's going to break and then make another high. What made you think that would break? We'll get a break from up there. Anyway, up there, I'm trying it.
Something, Dale? It's my intuition tells me that there is one more hurrah coming. You know what I mean?
Yeah. Because it's going to take that. I mean, if we just go to 7,400 on the NASDAQ 100 right now, it would do that without the S&Ps and Dow making a new high, is my guess. But then if you get it one more pullback and another high, maybe you get them all in unison making new highs. Looks like late summer.
Yeah, might be the case. In any case, I think this is a likely scenario for the market, and this is what I'm monitoring at the moment. Now let's have a brief look at the Dow as well. The Dow is obviously probably the heavier of the stock indices, the US stock indices at the moment. But still, somebody can also see that there is a potential that this was a valid break outside this trend line, and perhaps we're seeing some weakness before we see another push to the upside. It's more than obvious, though, that if you want to be long, Dow is probably not the preferred instrument to use to do that. Now, let me also show the DAX. If you remember, we had this conversation yesterday with Gregor. I told him that for me, 12,600 is a good downside target, and I'm quite happy that the DAX hit it because I think it has a decent chance of holding. Yesterday, at some point, we were showing that we're going to break below it, but once again today we are paring back the losses. So I think a break above 12,900 will point to new highs. So we're not out of the woods yet, but the fact that 12,600 has proven its value is already something to consider here. FTSE tested perfectly the 7,600 area, is moving higher from there. I have to tell you as a fact that I'm not so convinced. I mean, the scenario now might be something like this, right? So we might have one more leg to the downside, find support anywhere between 7,600 and 7,450, and then move to the upside. So I would be a little bit careful. And this would also coincide with my belief that there is a good likelihood that the cable is going to rebound from here, because definitely cable rebounding is going to help FTSE depreciate somewhat, right? So let's have a last look at what's happening in the markets. By the way, cable is actually right on the highs. Let's have a look at the euro. Let me zoom in. Euro more or less unchanged, doesn't seem to be doing anything. So the market actually hasn't responded at all one way or another to S&P is near the highs. S&P looks like it might end up having a decent day. USD CAD still rejected from the 130. USD yen still near the highs. Let's have a look at the Aussie, bottom left. So the market more or less seems to be calling it a day. Okay, I wouldn't rule out, a delayed reaction later on, but for the time being, nothing much as a follow through. Let's have a look at crude as well, because I wanted to mention, I forgot before, I wanted to mention that the fact that crude, after just a day of a recovery, seems to be so heavy, is definitely not a good indication for the bulls. It's also not a good indication for me, because I'm really looking forward. I'm still hoping that we might get a rebound towards 69.40, because I would be very, very willing to give it a go being short or one more push to the downside towards the 64 area, perhaps even lower the 62 area. Okay. So I'm crossing my fingers, hoping for a stronger rebound from here. So I can so I can be selling some. By the way, Dale, do we have an interview today? I forgot to ask.
No, not today. So we could wrap it. It was a great. You did a great job, and you and Stell covering the NFP. And God, I can't think if there's any. Oh, I don't think you covered the Zlotny shekel. Every other possible instrument, I think, has been covered, Steve.
You have a lot of exposure to the Zlotny.
Well, half Polish, so yeah. And when I buy kielbasa and pierogies, I do it in Zlotny. So anyway, a great time to talk about Trent Ore. And
that's what I want to say. I think it's a
Yeah.
nice way to wrap it up. So I want to thank everybody personally for being here. Next week, Blake is going to be with us once again. So have a lovely weekend. It's all yours, Dale.
Okay, and I agree with that. So give Trent Ore a call if you have any issues or you're shopping for another broker, because they know them all. Not just in the U.S. where it doesn't take much. But,
show them the page and where they can locate it.
Okay. Sure, buddy. So here's my screen. And here you go. You just go to the home page here. Also, I really believe weekends are a great time to give a trial a shot. Okay. Because this is a time that you can, practice going over the platform. It's very user friendly, but anything new, you want to have some time, and you could, prep your week with the analysis that we have here. And, someone was asking about, what we do here. And I really think it's about the people here. Okay, so at FX Street, I interviewed Blake several times, was always, he was a great draw. People wanted to hear what he had to say, and he made a lot of great calls. Greg I interviewed because he was a prize winner. Stelios I didn't. Steve I did, but I don't remember. And Amanda really does a great job in our member chat, and Joe Perry's going to be on Bloomberg in a few days, and everyone's seen the artistry of Andre Cardoso. So, it's very difficult to find this much talent in one place and all the different methodologies.
And Dale, let's not forget our friend Nick here a little while ago said, Dale, you're the best. And I agree with him 100%. So let's not forget you as well. Huh?
All right. Well, thanks. And, there is a reimbursement program, and you get a hold of Trent to set it up and find out who the supported brokers are, so that as you're trading long all month, your subscription's being paid by your activity. So here's Forest Park FX. Get a hold of them and ask for Trent. I haven't met many people that are more knowledgeable about the brokerage industry in FX. So have a great weekend, everybody. FBS, I'm not sure who it is, Willem, but I guarantee you Trent knows. Okay. So have a great weekend, everybody. Blake will be back. Our leader will be back. Thank you, Stell. Nick, I'm glad you like that new technical formation, the upside down pregnant woman you could put into your trading toolkit now. Look for that one and enjoy your weekend. And most of all, guys, we all have something to be grateful for. And I say to you, don't just count your pips, count your blessings. Let's kill it next week. See everyone Monday. Enjoy your weekend, recharge your battery, and do your work so you're prepped to execute and not just doing analysis on the fly. That's impulse trading, and we discourage that tremendously. All right, guys and gals, my trading warrior brothers and sisters, enjoy. See everyone on Monday. Adios. Thank you.